Okay, peeps, welcome back. So today we're going to be going over how to make $2,000 a month in options with Options Premium. So with that being said, let's get it. Okay, so before we go into that, first thing I want to go over here is a couple more shout outs to you guys continuing to do super thanks, man. You guys are too generous. Like seriously, we were not expecting this at all. So $10 shout out to BuckWeb7102. Thank you again for the support of this channel. We're doing our best here for you guys. We're on a very serious time constraint, so we do what we can. For some people, it's going to be good enough. For some people, it's not. We can't please everybody. We get that. So it's just kind of part of the way things go. But thank you again. And also Bree Mill for the $13.99 in, I believe that's Canadian dollars. So shout out to Canada. And shout out to Bree Mill 8257 for your guys' support of this channel. So we did actually have a comment. It took me a while to find this, but we had a comment for one person. Okay, one person asking for us to go ahead and do the channel memberships again. It was pretty much our intent to not do the channel memberships and to make up that difference between trading income and options premiums, just to kind of show you guys that we're dead serious when we say, I mean, if you guys, of course, if you want to sign up for it and do super thanks, we're grateful for it. But for the less optimistic people out there who really just plan on being degenerates or whatever they're doing, who just want to nitpick and naysay and stuff like that, we don't really give a crap about that. I'm just going to be completely honest. So for those people that are like, oh, well, it's too expensive, all I got to say to that is, oh, well, dude, what are you doing in finance? I mean, I'm not going to try to beat a dead horse here with what we talked about before, but I think I made my point clear. We're going to go ahead and do it one last time. We're going to open the channel memberships again because no more serfs asked. Again, thank you for that. If you hadn't asked, we would certainly not be doing this. So again, thank you for the $25 super thanks. It just goes to prove that some people are willing to pay for this. And again, if we, at some point in the future, if we do a Patreon, just understand there will be a cost for that. Because again, it's not just about like, we don't really need the money. It's more so about the fact that it takes our time. It takes extra time out of us to be able to manage that kind of thing. So it's one more thing that's on our plate that we have to do. So I don't think we're really asking for too much. We could lower the price, but again, I mean, if we were going to do 99 cents, we might as well just make it free, and we're not going to do that. So, yeah, we did read this comment and we heard you, and we're going to go ahead and try to do it again. Of course, YouTube does not have to agree to this. It is up to their discretion. It is their program. So just to show you guys that I am not lying to you, I am actually telling you the truth. I did forget to mention this before. We actually only get to keep 70% of the channel memberships, so we don't even get to keep 100%. It's the same thing with the YouTube ad revenue. They get a certain cut of the revenue. I don't remember exactly what that number is, but it's a pretty decent amount. Of course, YouTube, it's a company based out of Google. They got to make money. They got to pay their bills and stuff. So it just makes perfect sense to us. But just to crunch the numbers here, as you guys can see, if we were to do 70% of 25, I mean, we're only going to get to keep basically about $18 for every membership. So it's not, I mean, it's something and we'll take it. We're grateful for it. But again, in the grand scheme of things, compared to what we make, it's really not that much. So we'll just click on it just to kind of show you guys what it looks like. So this is what it looks like. We pretty much would have we have to go through all these again, unfortunately. But pretty much what we did here, and we're being completely transparent, we just went with one level. Okay. So one level, this is actually not something we would normally even do on this channel. But we're going to go ahead and show you for simplicity's sake so you can understand what this looks like. And again, we're not the only channel that does this. There's a lot of channels out there that do this. There's a lot of really big channels that do this with like 1 million, 2 million, 5 million subscribers, that they have tons and tons and tons of people that sign up for this. There's people out there willing to do this. And we had a lot of requests to get, basically these people want, now, like give me the content right now. I want it this second kind of thing. So this is pretty much the only option we could come up with. to where it's viable with our time constraints to do this for you. But as you guys can see, the prices for these on a monthly basis range pretty much anywhere from 99 cents to $500. Again, I did tell you guys that was going to be roughly about the estimate. So this, of course, this was just a random one that we saw that was popular that we think is fair priced. And that pretty much goes through all that. So we will be going ahead and doing that again. But of course, we have to have YouTube's consent. We can't just say, oh, yeah, we're just going to do this, guys. In order for us to do that without having to collab with YouTube, we would have to do a Patreon. And unfortunately, at this time, we don't have time to do that. So until we can do this full time for you guys, we just don't have time to do a Patreon. So this is the best option for both of us. So let's now get into options. All right. So you guys want to know how to make $2,000 a month in options premiums. First, there's a couple of things I have to say about this first. So 3 things. Okay. Number 1, if you want to do this, what we refer to as the wheel strategy, go back and check our one options video that we did talking about the wheel strategy and how to do cash secured puts and or covered calls. Basically, the wheel strategy is a combination of starting with cash secured puts and then doing covered calls, getting your shares called away, collecting the money that you invested after the buyer buys your shares away, and then turning around and doing another cash secured put, and then just continuing to wheel that over and over and over. If you want more details, go check that out. But so first thing you need to do, well, I shouldn't say you need to do, of course, not financial advice. You guys can do what you want. But the 3 most important things to understand. Number 1, understand what a cash secured put is, understand what a covered call is, understand how they work, okay? And understand how to optimize a strategy with them. Number 2, do understand that it doesn't matter how solid your strategy is. The markets are going to do what they do. Okay, there's a chance that in either direction, whether you do a cash secured put or covered call, the underlying stock could work against you. Okay, we had this happen with CLSK, where basically we did a $23.50 put when the price was at $25 and it slammed all the way down to 16. And we got our shares at $23.50, unfortunately, because we thought that was a good price. We thought it was going to break out. It did not. And we had to sit for a pretty heavy drawdown for a while. Okay. So no matter what you do, there's a chance the markets could work against you. Okay. That's number 2. Number 3, it's always a good idea to take a look at the fundamentals. Again, if you're doing options on these, some people want to go with the riskier bets for options. Our options portfolio, we're taking a look at something we can hold long term. So again, when doing covered calls or cash secured puts, you can do these on either growth stocks, or you can also do them on dividend paying stocks. You can also do them on ETFs like the Triple Qs, SPY, and the Russell 2000. But of course, if you do that, you have to have 100 shares. So, that's a lot of money. If you have that kind of money, congrats. We don't have the kind of money sitting around to do that just yet. Maybe one day. So this is a website we like to go to for looking at the fundamentals. This is the Yahoo Finance page. So pretty much what we're looking for here is a combination of 2 different things. So we want to see that the total revenue that the company that we're doing an option on is growing over time. As you guys can see, 565,000, 2021, 984,000, 1.53 million, 2.1 million, and 2.1 million. There is pretty much nothing for 2024 at this point, but presumably it will be higher based on this track record. So we want to see increasing revenue year over year. That's the first thing. Okay. And then the second thing we want to do is zoom out on the charts and take a look and see how the price held during a bull market. So you guys can see that the price was pretty stable between roughly about $10 and $30. Again, is it a perfect chart? No, but very few stocks generally move up and to the right consistently over time without huge pullbacks. That's normal. Fed raised the rates here, so that kind of explains why the drop happened. And then, of course, the recovery year, and we're kind of just bobbing around waiting for earnings. So it's been said that it's not a good idea to do options during earnings because it can be very volatile. We're basically trying it at this point. We don't know, but we like to try to get firsthand experience with anything we do just to kind of really understand the consequences of doing it. So April 29th is the earnings. So that's going to be this Monday. So a lot of people will say that in options, it's not good to do any options contracts during earnings, or if you're in a covered call or cash secured put, to get out and close the trade, ideally for a profit before earnings. We don't know how true that is yet, but again, these are two things that we look for. So the three stocks we're going to be taking a look at today is SoFi, Palantir, and Robinhood. Again, these are not like super mega caps like Apple or something like that, but a lot of the tech companies, you need tens of thousands of dollars just to write one contract. So let's do this very simply. So we're going to go with weekly options. Okay, so basically pretty much the Friday of the following week for every week that we do this. So in this case, it would be down here on next Friday, which would be next month. So we'll start with the cash secured put, which again, you can do this one of two ways. You can either pick up your contracts initially for a cash secured put. Of course, the delta you choose to use, that's up to you. We generally do between a 20 to a 30 delta just to be safe. And then turn around and write a covered call from there. Or you can just either DCA the shares in straight out of the market until you get to 100 and then write a covered call and then start the wheel strategy, or which means that when they get called away, you go to a cash secured put, or you can just buy 100 shares right off of the market and then turn around and write a covered call, which I believe is known as a buy right, if I'm not mistaken. So three alternatives there. Some people, they're not going to have the capital to just throw $800 into this. You can just DCA in, and when you get to 100 shares, then you can do a call or well, in this case, a call, and then get your shares called away, ideally for a profit, and then do a put after that. So we are selling, we're not buying, just so y'all know. So $7 strike price, $20 in premium for 1 week. Again, this is a 22 delta. Anything between, I would say, probably a 20 and a 30 is going to be relatively safe. Pretty much means that there's between a 72 and 80% chance that the contract is going to expire worthless, meaning that you do not have to take the shares or sell them, and you still get to collect the premium. So how would we get to $2,000 a month with SoFi? Well, if we just go over some simple numbers here, you can see that we have 20 contracts, and we can do the math on this. Of course, this just 20 contracts would come out to $400 a month. So obviously we need a little bit more than that. So if we go to 25 at the current put price, you guys can see that this would be $500 a week, or basically about $2,000 a month. So how much in capital would you need in order to do this? Well, it'd be $811 for 100 shares at the current price. But again, we're not going to buy at the current price. This is the market price. This would be the price that you would get assigned the shares on a cash secured put. So basically what this is saying is you want to buy the shares at a discount. So in this case, we go $7, and then of course we have 25 contracts, so that's 2,500 shares. So times 2,500, this is what you'd be looking at. You'd be looking at about $17,500 just on SoFi. But if you don't want to run the risk of, getting dropped on by the whales or whatever in the market in just one position, maybe it's a good idea to have multiple positions. Not financial advice, just be diversified within your options portfolio. That's why we have 3 up here. So that goes for SoFi. Again, this is assuming that you want to and also can get assigned the shares at $7. Again, the price does not have to expire at $7 or lower. The lower the delta is on a cash secured put, the less likely you are to be assigned. So if you wanted to get assigned, maybe something a little bit closer to at the money would be better, like a 35 delta, or maybe this strike price up here at $8, which would be a 50 delta. But then the price of the shares could go lower and you could get assigned, kind of like how we did on CLSK. So now let's go to the call side. We'll go with something relatively safe, like the $9 strike price, 28 delta. So again, that's still less than 30. So this is assuming that you had the 2,500 shares. Okay. So we'll go ahead and click on this. So as you guys can see, 2,500 shares or 25 contracts would come out to $600 a month, or about $2,400, or $600 a week, about $2,400 a month. And this is assuming that you either bought the shares off the market at $8 or got them put to you at $7. And again, you'd be looking at not only $600 for the week, but if your shares get called away, you then also get $1 to $2 in profit based on the share price appreciation. So we can just go over that right now. So 2,500 shares times $1 would be, what do you know, $2,500. And if it goes up $2, then you would basically make $5,000. So we'll now go over to Palantir. Again, we're not buying options, we're selling options in this case, because we want to get paid premiums. So we'll just take a look at a sell put. Try to pick a relatively conservative delta here. So 33 might be a bit high, but again, we do want to get paid something. So you know what, just to be on the conservative side, we'll go with this one. So we'll say roughly about 30 contracts. So that's a lot more than SoFi, but again, not every stock is going to be similarly priced. And also not every stock is going to be as volatile. So you have 47% volatility here compared to something like SoFi's massive 154% volatility. That is something to keep in mind. So 30 contracts on a put at $2,150 would get you about $500 a week, or $480 a week, pretty close. And then again, that would be about $2,000 a month. So if we do $2,150 times 30 contracts, whoops, my bad. I actually did the math wrong on that one. So $2,150 times 3,000 shares. That's how we want to do it. So you'd be looking at $64,500. Again, it is a lot more, but it's the less volatile stock, and the share price is a lot more, so it requires a lot more capital to actually get those numbers there. So again, $2,350, and assuming you had 30 contracts, now your premium is even more. So $629 a week, or just over, or I should say a little over $3,100 a month. That's what I'm trying to say here. So $2,350 strike price, and we go back here, and we were looking at the $2,150 strike price. So not only would you get that monthly income, but you would also get the $2 stock appreciation per share times 3,000 shares. So you'd walk away with another $6,000 in profit. Now, if we go to Robinhood, so this is, of course, we use the Robinhood platform, as you guys know. So it would make perfect sense for us to have this one. So we can take a look at and again, another important thing here is the open interest and the volume. You want to, ideally, it's good to pick something that has a lot of this. So you can see several thousand different contracts being traded, lots and lots of volume here. So it's very, very liquid, which means it's easy to get in and get out with a tight spread. So $18 in premium. So we would roughly need, I think, a little bit less than 30 contracts on this. So we'll go like, say 27, no, maybe 28. Yeah, there we go. So 28 contracts on the put side, $500 a week, or about $2,000 a month. And again, you don't have to do this just in one stock. You can do it basically with like maybe 10 different stocks if you want to, or 5 or 20 or 100, whatever you want. I think that probably the most important things here are probably the making sure that the company has good fundamentals and that the technicals are right. So the $17 put, we're basically looking for 28 contracts here. Okay, 28 contracts times 100, 47,600. Again, I don't know that that's right, so let's redo that. Okay, so yeah, that is right. And again, I mean, it seems like a lot of money, but just imagine how much money you would need to have a dividend portfolio produce $2,000 a month. Even with relatively high dividends, I'm pretty confident it would be a lot more than this. So again, on the call side, we'll go up to the $19 strike price, so 17 in premium. Looks like we would have to add maybe 2 more contracts here. Yeah, so that would equal basically 500 a week or 2,000 a month. And again, that is the $19 strike, and of course, the one that we were looking at here is I believe the $17 strike on the puts. So yeah, again, $2 per share appreciation. And we would times that by, I believe it was 2,800 shares. So pretty massive profit. And again, you can do this over and over and over and over. Putting up all the capital all at once to do something like this is not something that you have to do. You could slowly DCA into these shares over time. And when you get to 100, if you just wanted to take it slow and steady, you could do that and then start the wheel on whatever it is you're trying to buy. We like to do a combination of both, just outright 100 shares and then sometimes just DCA in. It depends on the technicals. So again, SoFi is about to have earnings. We'll go ahead and take a look at the technicals and the fundamentals, and then we'll close this out. So technicals, SoFi is about to have earnings, as you guys can see. Again, what do we want to see for the price? We generally speaking want to see the price go up. Here's your bear market bottom. As you guys can see during the bull market between 2020 and 2022, this thing was pretty much just going straight up. So it's a pretty strong indication that this is a good stock to own. Again, that is not financial advice. So excuse the barking dog in the background. So we'll go over here to Palantir, and then basically what you would do is you would go to Yahoo Finance, type in the ticker symbol that you want, and then go down to financials. That's where you would see this. So again, 2020, it looks like maybe 1 billion, and then 1.5 billion, 1.9 billion, 2.2 billion. So you can see the cash flow, the overall total revenue is going up. We'll do the same thing for Robinhood. Just type in the ticker symbol, go down to financials. And this one's not as consistent, but as you guys can see over time, it generally does go up. So 958 million, it says in thousands, so I'm assuming that's 958 million. 1.8 billion 2021, that makes sense. It was a bull year. That was a bear market year, so of course the revenue is going to go down a little bit, but as you guys can see, they made a new all-time high at 1.865 billion. So cash flow is very much positive and growing. So that is one major thing to look for in options. Anyways, this is how to make $2,000 a month with the wheel strategy and options, selling calls and puts. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.